If you're looking at the indexes, they went absolutely crazy on the day. The past 3 days, you've went from 12,1 all the way up to 13,000 on Nasdaq. S&P, how is it moving? Absolutely going crazy. After we broke our bull zone, what happened? Not a shock to us. You went to 412, and now you're pushing the key range of 416. But where we go from here, how do you trade, and what are you and what should you be looking for? Let's talk about it. The first thing I need to ask you to do is consider liking and subscribing. It helps with the channel tremendously because I'm giving you the videos every single day to know what to expect going into the next day and getting prepared as well. And if you are interested, our new Facebook group is now live, so make sure you get tapped in there. It's absolutely free. The link is down below, so make sure you check us out. Now what we're going to do is go back over here and look at what's happening on these indexes. Now I want to highlight something specifically. I posted this video yesterday. I went over exactly what was going to happen today and essentially what you should be looking for. And I want to highlight the fact that I'm always going to be honest with you guys with what I'm doing with my money. I do not care if I get proven wrong the next day. I'm going to tell you exactly what I'm doing day in and day out, because when you come to the channel, you never need to doubt that I am being honest and straightforward with you guys. So yesterday I said the market was looking bullish, but look at some of the hate we were getting. Inverse, stay tapped, but we should be going down faster. It's a giant bull trap. People trying to kind of hate on the channel, and they have nothing better to do, so they want to come here and hate. Apple and Amazon beat on bad estimates. Careful thinking it's going to fly. Guess what happens, boys? We stay true to ourselves. We stay true to the DD. We follow the fundamentals. We follow what's happening with the market, and you make money in this market. What about Discord? How are they doing? Let's just look real quickly. Am I lying there? Am I wrong there? Well, let's see. One more. 100% gains. We have more coming in here. 130% gains in Discord. Well, what about here? Nvidia, over 50% gains there. This is all going on today. Massive gains all across the board. Am I lying? Am I being straightforward with you guys? I'm just saying Discord seems to be proving the case here. Some people that aren't even in Discord, they're proving the case, posting on Twitter, posting on the Facebook group. I'm telling you guys, I'm trying to teach you what to look for here in the market, and I'm trying to show you key things so you don't miss them. Let's get started. What was the big factor on today? Now, going into yesterday, I'm going to come down to about the 15-minute chart so you can kind of get in here. Going into yesterday, the big thing here, we talked about breaking above 409 and 410. That was really what we needed to get above. You started to get above 410 right here. You broke it once, came down, broke it again. Boom, rest is history. Now, going into this week, key levels we're talking about. We talked about them yesterday. I said the level we need to be looking out for after 412. 415 roughly to 417. That's our next level. After that, we're looking at 428 to 430. This is the absolute high I have on this push. If you get above this, in my opinion, you are looking absolutely bullish. There's no bearishness in sight after that point. Just my opinion. If you get above 430, that's what we're looking at. But right now, on a broad market scale, I've continued to tell you, I don't think we're out of the trenches yet, right? I don't know if necessarily a bottom is in. But what I can say is you're trading in a bullish trend right now, okay? And so what do we know about bullish trends? We know as we establish these bullish trends, we need to follow the trend because that's how you're going to make money day trading, right? That's all I'm saying here. And you're pushing in a bullish trend. You haven't got over the 430 range, which is the key range to get above. You get above that, then we're talking. But going back to NQ, this was the thing I said yesterday. No matter what, you were going to break up today. You were going to start moving up. And there was big news on today that justified this. And once this news came out, you can ask Discord, ask down below in the comments. Once the news was posted, I went heavy into calls. I didn't care really too much about stops. I had stops set in place, but we knew the market was going to run basically since around 11 a.m. Central Time. So what's happening here? You're still in this key zone. You're not above 13 yet. You did break 13 for a second right here. You broke it for a split second. You can kind of zoom in a little bit more here. But you're mounting now this 12.9, and it looks like going into next week, you are in full bull territory. Now I want to go really quickly out to the 4-hour chart so you can see some of these key areas now where we're trading above. You can see we broke previous highs right here, and we're now into this key area we've so long been waiting for. This right here. If there is a money pocket, this is a money pocket in my opinion. This whole area is very illiquid. What does that mean? Okay, I'm going to take you over a book map and show you a heat map of the market. As we look at this heat map, I wanted to show you the scale in which the market is moving. Okay, so we can see on this heat map, it's showing there's key liquidity levels. The darker towards red you get, the more buyers or sellers that are in these ranges. So as we zoom in here, ignore the bottom, just stay with me. You are trading in this upward channel, getting rid of every seller in your ways. You had a wall right here, you broke through it. A wall right here, you broke through it. A wall right here, you broke through it. Continuously, all day, broke. Continue to buy through it. You eventually got a little bit of resistance at 4140 on the S&P futures, but where does that line up with NQ? Back at 13,000 flat. We know that's going to be a big level. If we're going to break above it, it's probably going to be Monday morning. And once you hold above it, in my opinion, once we get above there, I don't believe there will be this many walls, if you will. I believe it'll be a very volatile push once you get above that range. What do I mean? So we've talked about illiquid areas here before on the channel. I want to highlight when we go back to this key area, back on around April 26th through roughly May 5th. When we look at this area, look how quickly you're testing the top and the bottom of this range. One day, the next day. So in a 1 day period, you're dropping from 13.5 down to 12.8 roughly on the Nasdaq. 700 points on the Nasdaq. What about the next day? So the next day you go from 12.8 all the way up to roughly 13.3 right here. That's a 2 day time period so far. So you got a 700 point move, a 400 point move. The next day you go down to roughly 13,000 flat, and then you bounce all the way back up to those highs of 13.5. Another 500 point move. The next day, what happens? You open up roughly at 13.2, you move to highs of 13.5. Before I go any further, I want to give a special shout out to Hanka Trade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using Hanka Trade specifically is because, one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you a 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there's certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. And then you tank at the end of the day all the way down to 12.8. Another 600 to 700 point move. This area right here, which we're entering right now, is very illiquid, meaning there's not that many resistances. So when you start to get a movement, it's going to be straight up and straight down when you're in between this range. So as we come into this right now, as we zoom back to where we're at, we're coming back into that key range. So going into Monday, going in through Wednesday, if you start to get above 13,000, the moves are going to be very volatile to the up and back down to the downside. If I'm targeting anything, now right now, I have some positions open. I'm still long. I still think we have more upside. I did make a lot of money on the day, but I let some of my runners stay out there. I do have to believe there's a strong possibility we start to shoot up. What was the big news on the day? This is where things, in my opinion, get interesting. So around 10 a.m., 11 a.m. Central, this was announced. It kind of slipped past me. I didn't see it at first, but the Atlanta Fed has been giving their overall predictions to GDP. Now, we talked about this yesterday. If we go over GDP and the overall expectations on the market, the Atlanta Fed was giving really crazy overall expectations for this first segment of quarter number 2. and how we were going to get our GDP. At first, they said it was negative 1.5, then it was negative 1.2, and then yesterday it came out, or Wednesday, I'm sorry, negative 0.9, which was a beat. So this was better than expected, which we ended up doing pretty well after that came out, right? Okay. Now, today, they came out with their expectations for quarter number 3's first GDP number, and they came out with positive 2.1. This number currently is at negative 0.9 right here. This is where you are currently. So they expect us to basically move up 3 points worth of growth by quarter number 3. This falls in line with what the Fed has been saying, that inflation is somewhat being handled. They can lower the rate hikes in which they're doing. Now they're projecting to do a 0.5 hike at their next meeting. This would be bullish for the economy. Now, I personally am not drinking this Kool-Aid. I don't think inflation's handled. I want to make that very clear. But based on this information, when they released this right here, I told everyone in Discord, I let everyone know, you're bullish. No matter what, you are bullish. Why? Because they are saying the economy is going to grow. We just had killer earnings on major stocks. Indexes, the Nasdaq, SP500 are going ballistic. And then they just put the icing on the cake that they see growth happening for quarter number 3, their first GDP number. I'm just saying, you go from negative to extreme positives and decent growth, and you have great earnings. That's bullish behavior. That's everything you need to know. So if you're in Discord, I let everyone know, but if you didn't get the memo, this was it. This is why I went heavily long on pretty much everything, right? All because of this. Now, where does that leave us for Monday? If you ride this momentum, in my opinion, you're going to start getting above 13,000 and you're going to start pushing towards 13.5, 13.6. It's just going to happen. S&P futures. Now you're coming into a key range, a supply level. This is pretty big in my opinion. Jay Ream, I haven't looked at his key levels yet, but I'd be willing to bet his major level is going to be about right here at where you're entering right now. But I would say this whole level right here is going to be major. Basically, 4,200 all the way through 40.8 is a major level in which you're sitting. You can see that bottom retest there near the middle of the day right there. So I'm going to say this is a major level overall to be watching, but the highs of this area are going to be even more important. You have 2 monthlies right there on the S&P futures, which I can say right now are going to be drastically hard to get over. If anything, you're going to need a gap over those to start Monday morning before, U.S. markets start to open. Now, what I will say though, you got to just your first push. That's not that big of a rejection. Not too many sellers were stepping in. Also on the day, talking about S&P and Nasdaq. Typically, when you're coming to this area and you're coming to a key resistance, we talked about this a lot. We're always looking to short when we get to those high levels, right? But something interesting happened here, right? So we keep testing this 12.9 key area we've been talking about for weeks, literal weeks. The thing I want to talk about is when you're looking at overall volume. So if you go to something like Thinkorswim, you can see the volume a lot more clearly. But the volume was very lackluster. And I'm seeing people comment this on previous videos. I want to make something very clear. To go up on a stock, or an index or crypto or whatever you're trading, you do not need high volume. You don't need it, okay? In order to go up, all you need to have is more buyers than you have sellers. So you can do that with minimal volume. But one thing to mention is when you're seeing these crazy declines, like here, and here, you're seeing massive volume. You're seeing, yes, there's a few buyers, but sellers just dominate and they push you down. But with this move to the upside, people keep commenting. I'm seeing your comments, but I've gone over this before. You don't need crazy volume to go up. You just don't. A great saying we talk about in Discord: bulls take the stairs, bears take the elevator. And that's really what's happened. So if you look, you were just bullish, you were just up and up. But then what happens right here? Retrace, boom, elevator. So you go up, and this could be considered an elevator going back up, but you're stair stepping back up, elevator, back down. So what I'm saying here is I see it, but as you see this test right here, what happened? Sellers weren't stepping in, people. You were seeing very minor sell-offs, minor. This was kind of a bigger sell-off today, but then you bounce right back. And for me personally, that just told me bears had no control whatsoever. And we saw the same thing yesterday. We saw us come to that daily, rejection, very slow, small rejections. We came back down, made a base at the weekly, and boom, shot back up. There's just more buyers in the market than there is sellers. You can say short squeeze, whatever you want. Simple as that, people. If you really start to tap into these charts and really start to look at what's happening, it's all based on volume and it's based on price action. And the price action comes right back down to volume. There is just more buyers than there is sellers on the market. Simple as that. So when you come to key areas, yes, volume is important to watch. If you're stagnating with very low volume, chances are you start to break down. But if you're selling down like this and it's very minimal, and when you come back up, more volume kicks back in, it's telling you that there's more bulls out in the market than there are bears. Just telling you, food for thought, keep it on your radar, pay attention. But for me personally, what am I looking for? I'm going to highlight this because I believe this is the biggest money-making opportunity you're going to have in a little bit. If you open up above 13,000 Monday morning, I have to believe you're going to get a test of 13.5, 13.6. I know that's extremely bullish. That's 600 points. I know. If you open above 13,000 right here, you will push up. If you stay below this area, there's a chance you push down, but I'm not betting on the bearish side yet. That's just not for me. I just don't like the risk to reward. If you start to break below 12.7, 12.8, then I'll flip back to a bearish thesis. But as long as you're trading in this zone, I have to remain bullish. That's just the way the market looks. When we look at VIX, what's happening here? VIX is going straight down in a straight line. Very, very clear. Even on dips, whenever you're starting to dip on Nasdaq, on S&P futures, anything like that, you are getting destroyed. VIX continues to come down. What does this tell us? Market is bullish. What about junk bonds? What are they doing? They're going straight up, people. They're going straight up. They're not even dipping. They're not even having retracements. When you retrace, you come to the 9 MA and you pop right back up. I don't know how else to show this. I don't know how else to look at this. I'm trying to keep it as clear as possible so you can trade based on this information as well. When we look overall at yields, they're getting smashed as well. They're getting pressed right back down. And then the big boy, DXY. I want to highlight this because I didn't highlight it yesterday. But DXY, look at where it's at. You're right at that key level we've been mentioning for weeks and possibly almost a month now. You're coming back down to previous highs. You're retracing. There's a chance you come a little bit through. Bone Thug in Discord, we've been talking about this a lot. He thinks we're coming down to the monthly. It's possible, but this is the key range. We expected this pullback. This is setting us up to get a little bit more pressure, in my opinion, on indexes. However, as long as you're still at these high levels with DXY and the dollar, just so you know, the dollar is now about to get ahead of the euro. The euro for years has dominated the dollar. The dollar is about to become a numero uno. So make sure you're looking out for that as well. Inflation is still happening. It's still an issue. I'm not saying that the bear case is over, but in the short term, you have got to be eyeballing and looking for this potential upside. So again, very clear. If you open up Monday morning above 13,000, you will push towards 13.5, 13.6. That's my bold prediction, and that's how I'm trading. If you hold below it, you might get some chop and some downward pressure, but I'm not trading the downward pressure until you get below 12.8, 12.7. Until then, you are bullish. That's my opinion. Take it, leave it. But guess what? When you come to the channel, you know you got the honest opinion from Tyler, and you know exactly how he's traded the market.